Hello everyone, my name is Moji. You're watching a Bitcoin bubble news channel. All over the place, money was being taken out. What do you think? The prices of everything went down. Why? Because it raised the value of money, not lowered its value, since you were lowering the amount of money in circulation. Okay, now you understand. It's kind of like buying back shares or burning coins. It's always the same way of fucking. After you see it, you'll think, oh, that's so clear, that's why all of the assets I chart against world liquidity look the same. In Nasdaq's case, 97.5% of it was linked to world liquidity. After weeks of worry, fear, and after some short-term problems like when the German government sold 50,000 Bitcoin, the cryptocurrency market has returned and is now growing again. In the 3 trading days that finished on Tuesday, $26.2 million came into BlackRock's 8-bit, $29.8 million came into Fidelity, and $22 million came into ETF. Twitter said on Tuesday that Bitcoin ETFs got more than $1 billion in new money, which is a good sign for the ETFs and the cryptocurrency. Eric Balchunas, a Bloomberg ETF expert, said that the ETFs did better than he thought they would in 6 months. His tweet said that Bitcoin ETFs had won $300 million yesterday and $1 billion for the week. This was after taking a step back in June. The important number, the year-to-date net sum, went over $16 billion for the first time. The goal for the first 12 months was $12 to $15 billion, and it was reached with $6 billion. Air thinks that more ETF allocations of several million dollars will happen in the next few days and weeks as the cryptocurrency market and world liquidity get better. Raoul Pal, founder and CEO of Real Vision, agrees especially about the change in the world liquidity situation. Pal thinks that asset prices will respond quickly and that all of them will go up by a lot. He thinks the prices of Bitcoin, Ethereum, and Solana will triple, going from less than $2.5 trillion to $12 to $15 trillion. In Pal's most recent speech with Bitcoin B. Thank you for watching this video. If you want to see more like it, please like the channel and turn on post alerts. The YouTube system and your channel's growth are both helped by everything you do. Thanks, and have fun with the movie. I don't think of liquidity as a flow of money. It's just a pure insult to money. If you put money here and take it away there, the value of an item seems to go up. It took me a long time to figure this out because I kept mid-curving the whole thing because I couldn't see why the stock market wouldn't have more volume when there was liquidity or QE. That means it can't be doing anything. I thought about that for 2 years before I finally said, oh, because it's just re-rating over COVID. I saw it in the Cayman Islands. The prices of homes went up by 50% like that. They didn't trade there, they just went there because it was easy to get money. I thought, okay, I'm getting it, the world's currency falls about 8% a year, so we don't see this magic force. Everyone in the world will have to pay about 8% more each year to service their debt. It's like a tax. The other one looked at this and thought, how dare they tax us? Then you ask, how much would you pay for a put option that your stocks don't drop more than 30%, your home prices are safe, and the world economy is safe? Would you pay 8% a year for that put option? It's probably not way too expensive. That made me think differently. This is why I believe we've removed the left tail risk. This 8% is being used as a put option throughout the whole system. Okay, this is more about the flows is the other question you ask. When I think of the real flows, I think of hot money coming into tech stocks or going from fiat to crypto land across that bridge. Let's call it the Bitcoin ETF bridge. I also think of VC as foreign direct investment. Both of those flows are caused by something very easy. It's the way business works. Why? People have more money to invest when their wages go up. Things start to move better. If we look at the ISM right now, it's still below 50 and needs to pick up. There are louder signals going forward, which means things are about to get better. People aren't investing a lot of money in crypto though. Why? People don't have the cash because jobs are still hard to come by and the market is still bad if you're in the venture capital business. You know that nobody has cash releases. There is a real problem at every level of the stack, from private equity to growth VC. The only place it's not a problem is with early stage coin stuff. Capital is stuck because it's not making any money. If you think about Tesla stock, it's not very high even though it has all the tech stuff. This is because people only buy cars when they have money, which currently isn't much. Rates are a little too high. That business cycle starts to pick up, and guess what? If you look back at the everything code and the macro seasons or crypto seasons, the macro summer is when the ISM starts to go up and earnings start going up. The world is full of people who take risks. I think that's it, which is why it sounds so great played over and over. Powell thinks that as money flows get better before the US presidential election. Finally, in November, the cryptocurrency market will get the boost it needs to move from the dull zone to the banana zone, where prices soar and the market goes crazy. The CEO of Real Vision and a former executive at Goldman Sachs thinks we haven't seen that yet because the Federal Reserve wants to keep interest rates high for longer to lower inflation. The CME FedWatch tool shows that traders are now sure that the Federal Reserve will lower interest rates by September. Before the elections in November, rate cuts, maybe stimulus checks, and quantitative easing will start up again, sending the prices of assets through the roof. Go back to Paul's movie. I think I put my value about 5 or 6 years ago. I was set on spending more, but I changed my mind because I realized that the market is pricing the total value of all users. It's a sign of hubris to think that the market will follow your set of values, and it will lead to your destruction. So that's where I took my lick. But I think I hinted at the possibility that this could be stopped, but I did so with very low odds. In reality, I would just call it a longer consolidation. There is a chance that it will last longer. That's because of several things. But I guess it doesn't matter to me at the end of each week or month because everyone is always asking when the top is. And I put out something over 2025, but who cares? However, it doesn't really affect what I do because what BTC, ETH, and SOL do really determines what I do each week and each month. Then we'll look at what those three do, then what the middle tail of risk does, and finally what the long tail of risk does. And the big meme coins have entered my kind of analysis of risk appetite every day or every week. So what really makes me decide what to invest in is looking at the range of risks. So long-term oracles, since we look at things over a long period of time, that means we'll probably stay in the market no matter what. But I'm still taking any action on the edges based on information every week, month, or 3 months. When I boil everything down, I see that capitalism is meant to make money, and I really believe that and see that. You know? I was raised by teachers who didn't trust business or money. I've talked about this before. Also, you should know that my dad did invest as a regular person during the tech and telecom boom. It's also interesting that I think my grandparents had a better chance of success because they bought at the right time. But I think it was mostly rough the whole time. So, I grew up in a middle class but somewhat financially limited setting where I was taught, don't touch capital. And don't think too much about finance. We would travel, but we were pretty average Americans. The big thing that opened my eyes when I moved to New York in 2014 and started working for Kathy. I met a lot of other people in the financial world and realized that everyone has to be in capital, and that's what blockchains are meant to do. We want to get rid of the stigma around crypto, which is the point of it, but the problem is that most people still don't have cash. In the end, they will still hate capital because it grows without it. So how do you get capital to people who don't have it and help them grow it in the last cycle or even a bit this cycle, whether it's crypto or something else? The whole. That being said, I do believe that social tokens are still being tested between entities, ideas, and other things, no matter what form they take. This is all about the same idea,